Hi guys, good morning. A brand new week and an important one at that, given the fact that we have the Fed meeting slated for this week. Wednesday night is when we'll get the decision by the US Federal Reserve, and of course the rate cutting cycle is expected to start with the Fed looking at a 25 basis point rate cut. In fact, there are a couple of articles that have put out a 50 basis point rate cut also on the table. Whether or not that jumbo size rate cut happens or not, is something we'll get to know on Wednesday night. But if that happens, could fire up the bulls, and a fresh leg of up move as well. For our markets, of course, we hit a fresh high last week. Whether or not we will manage to sustain that momentum is something that we'll be watching out for in today's session. The GIFT Nifty is hinting at a positive start. Lots to watch out for on the show, lots of stocks in focus, and of course, all your stock-related queries will be addressed by our expert on the show. So if you have any queries, as usual, keep them coming in on our live feed on YouTube. We'll try and take them up. But of course, before we head any further, let's quickly take a look at the top headlines at this hour. The S&P 500 and the Nasdaq gained for a fifth straight session to post their best week in 2024 as stocks rallied on expectations of a rate cut from the Federal Reserve later this week. Markets in China, Japan as well as South Korea remain shut on account of public holidays. The GIFT Nifty, however, as I mentioned, is hinting at a higher start for the Indian market. And the gold rally continues with the yellow metal sparkling in how, given the fact that it has hit another record high on hopes of a rate cut from the US Central Bank this week. Meanwhile, crude prices remain range bound with Brent around that $71 a barrel mark. An important cue for today, Bajaj Housing Finance is set for a blockbuster debut after its 6,560 crore rupee IPO got subscribed nearly 64 times the shares on offer, generating bids amounting to 3.2 lakh crore rupees. The qualified institutional buyers segment, in fact, saw an oversubscription of over 200 times. All right, then let's take a look at the cues for trade. Just about 4 minutes to go for the markets to open and the first ticks to start trickling in. The Sensex and Nifty rose 2% each last week. Although Friday was a quiet session, we saw some profit taking there. But Thursday, we hit a fresh high with the Nifty, in fact, crossing that 25,400 mark in intraday trade. Mid and small cap indices had a good run, although benchmarks were quiet on Friday. The mid cap index, was up somewhere around 2% on Friday. In fact, for the week, both the mid and small cap indices have gained in excess of 3%. The mid cap index, of course, shutting shop at a new high on Friday. Nifty Bank also saw good traction last week. Private banks have been underperforming so far, but that underperformance is getting, there are signs of that getting reversed because the Nifty Bank index rose 3% last week. All the sectoral indices except for the Nifty PSC index ended with gains last week. In fact, IT and FMCG were up nearly 3% on a weekly basis. If you look at some of the weekly gainers, Bajaj Auto had a good run, or good ride rather, last week. Divi's Labs, Bharti Airtel, Wipro as well. Even on Friday, Wipro was the top gainer on the index. Among the weekly losers, you had the likes of ONGC. Of course, crude prices, have been on a downslide. In fact, they had also cooled off below $70 per barrel mark last week. So ONGC and Oil India, they have been reacting to it. So ONGC was the top weekly loser for last week. Tata Motors, after UBS has reaffirmed its sell call, has been going downhill. That stock was also among top laggards on the Nifty last week. The life insurance stocks have also been witnessing pressure, selling pressure. So HDFC Life, SBI Life, those were also among the laggards. But BPCL from the OMC basket was a laggard last week, given the fact that there are talks of a fuel price cut as crude prices are cooling off. The street will be watching out for whether or not that happens. They could take a couple of weeks, OMCs, to decide on, a fuel price cut and the quantum of the cut as well. So, if that happens, of course, OMC's marketing margins will be under pressure, which is why BPCL was a laggard for last week. For Friday, of course, as I mentioned, we ended on a flat note, but the mid-cap index, of course, outperformed and ended at a record high. But if you look at the option cues for today, the Nifty put-call ratio dropped to 1.3 from 1.4 in the previous session. And taking a look at the ban list, the F&O ban list, continuing to be in the futures and options ban list are the likes of Aarti Industries, Balrampur Chini, Bandhan Bank, Chambal Fertilizer, Granules India, Hindustan Copper as well as RBL Bank. But one stock that has come out of the futures and options ban and will be in focus today will be Aditya Birla Fashion. There are early signs of foreign investors making a comeback when it comes to Indian equities. So FIIs were once again net buyers to the tune of 2,300 crore rupees in the cash market. Even domestic institutional investors were net buyers to the tune of 2,500 crore rupees in the cash market. But do we have our technical expert ready for today? Let's figure out then. Aamar Singh of Angel One supposed to join us. Aamar, can you hear me? Well, I don't think we have Aamar. Just about seconds to go, 20 or less than 15 seconds to go for the markets to open. In the pre-open, at least the Nifty is showing a 90-point cut. So, although the GIFT Nifty is hinting at a positive start, we could be in for an iffy start when it comes to the Nifty. Of course, indices will tread with caution because last week we saw record levels. Okay, so we are getting the first ticks. Sensex holding out in the green, flat with a positive bias, but the Nifty, just want to wait for how the prices are stacking up. The Nifty also on your screens, just about marginally in the green, 25,373, under 25,400, but looks like we are trading with a positive bias. The mid-cap index, I want to see what the mid-cap index is doing really. Whether or not it is extending the record run that we saw last week. Mind you, the mid-cap index crossed that 60,000 mark for the first time and also notched a record close. There is some issue with the rates on our systems. Just want to see whether they are changing on the screens or not. Some issue with the rates because the Nifty rates are not really changing. But let's see whether our guest for today is there or not with us. Aamar Singh, Angel One, joining in. Aamar, can you hear me?
Loud and clear.
All right, great to have you on the show, Aamar. Okay, got your point. Great to hear you and great to have you on the show. But looking at the market open, Sensex trading in the green, and I can see some metal counters doing well, the likes of Tata Steel, Hindalco. But we had, weak data coming out of China over the weekend. First of all, your views on the index. Where would the index take support in today's session? Do you expect the index to witness profit booking and tread with caution as we step into that most important event for the week, that's the Fed meeting? And in terms of support levels, what would you really be watching out for on the index as well as the Bank Nifty?
Yeah, I would say overall markets continue to remain strong and positive. So it's a buy on declines, no doubt about it. But yes, this week being very important in terms of the US Fed meet and also high expectations in terms of rate cuts. So 25 basis points already discounted, whether it's going to be 50 basis points is what the markets are anticipating. So markets would have high hopes from, and also the statements that emanate from the US Federal Reserve, that's going to be an important trigger for not only our markets but global markets as well. But I would say that as long as Nifty continues to sustain over the 25,000 level, any dip is a buying opportunity. Upside seems to be immediately resistance is somewhere around 25,000, 450, 500. That's a zone of resistance, immediate zone of resistance. Also, the derivatives data, if you look at that's, I would say, moderately positive. So, in that sense, any pullback is a buying opportunity. Also, if you look at the structure of the markets across sectors, across multi-cap, we've seen some positive momentum building up, except some of the heavyweights like Reliance or HDFC Bank, which really haven't performed that well despite the market hitting record highs. So that's something we need to watch out for. IT has really helped out. Pharma has helped out. FMCG has helped out. And as you said, that we've seen some positive momentum in the metal space as well. So being on the long side, but yes, one should be slightly cautious ahead of the US FOMC meet.
Okay, exercise caution as we step into that all-important US Fed meeting. Outcome is slated for Wednesday night. All eyes will be on whether or not Fed doles out a 50 basis point rate cut or a 25 basis point rate cut. But let's talk about two stocks that were in focus ahead of the listing of Bajaj Housing, Bajaj Finance and Bajaj Finserv. On Bajaj Finance, what would you do with it? The stock has seen some bit of an uptrend, right, in the run-up to Bajaj Housing listing, which is today at 10 a.m. So what would you do with that stock? Would you accumulate at these levels, or would you say that trade it for the short term and take some profits as the stock heads higher?
See, if you look at Bajaj Finance first, Bajaj Finance really has been trading very range bound over the last many quarters, and it's now not been able to take out its all time high, which was 8192 in the last quarter of 2023, that is the December quarter of 2023. And we are seeing some very strong pullback in the stock from almost 6,500 levels. The stock is currently on 3,600 levels. The momentum definitely seems to have changed, and immediate zone of resistance as we speak is somewhere around the 7,800 levels. Currently, it's around 7,600 levels. So 7,800 is the immediate zone of resistance. If you look at the structure of the stock, intermediate term, the structure has definitely turned very positive. Short term, the trend has been positive. Long term, we are seeing some of the technical indicators which are indicating positive momentum. So it needs to sustain over the 7,800 level for any major rally or hitting fresh record highs. So that's a level that one needs to keep a close watch on. Bulls definitely have an upper hand in Bajaj Finance. Talking about the other stock which you mentioned, Bajaj Finserv. Bajaj Finserv is technically better on the charts as compared to Bajaj Finance. So, if one were to choose between either of the two, it ideally should be Bajaj Finserv because even on the long term charts and the intermediate term trend, it continues to remain very strong and positive. So, this is one I would prefer as compared to Bajaj Finance.
Okay, two stocks really, before we head into some viewer queries. SpiceJet, this stock has been flying high, right? Of course, there was news flow over the weekend that the airline has approved special resolution to raise funds. The market share data, the aviation market share data for the month of August has also come out, and it has, of course, lost more ground, 2.3% vis-a-vis 3.1%. That's where its market share has been at in the month of August on a month-on-month basis. But the stock has been a high flyer. Look at the 1 month return, 26% higher. Even the last two sessions, it has done well. Particularly on Friday, it was up somewhere around 8%, and today as well. It continues to gain traction. What would you do with the SpiceJet? Do you think it's time to trade into this counter?
So, if you look at SpiceJet, what we are seeing here is that the stock has bounced back, and post its consolidation, the stock is inching higher. So this is one stock one can definitely keep a close watch on. Trading above the current levels, the stock could witness some rally of anywhere between 15 to 20%. So one can keep a close watch on SpiceJet as well.
Okay, keep a close watch on SpiceJet. Edelweiss Financial, there's been a block deal in the counter. The stock is up 8%. 27.5 lakh shares have changed hands in two blocks. Looking at the stock performance, of course, today it's up and about in the last 5 sessions, double-digit gains. Last 1 month, a 60% gain. Do you think it's entering the overbought zone, or do you think there is more room before it really enters into an overbought zone?
I would say the way Edelweiss Financial Services has really taken off, because if you look at the stock was in for consolidation, and I would say in the third week of May, the stock had made a high of almost 90, and then it corrected all the way towards 60 odd levels, and currently is trading around 135, 136. The stock has steam definitely left, and also if you look at the long-term charts of the stock, continues to remain strong and positive. If we go back in time, the stock in the June quarter of 2018 had made a high of 185. So currently it's around 136, 137. So the stock definitely has more of upside, provided it continues to maintain above the 110 levels. 110 is going to act as a zone of support for the stock. But if you ask and look at the structure of the stock from a long-term perspective or intermediate-term perspective, that continues to remain very strong. So any pullback is a buying opportunity. Sustaining above 120, 125 levels, the stock has a potential to rally towards 150, 160 levels. So this is a stock on any dip can be used as a buying opportunity.
Okay, Edelweiss Financial, use any dips to buy the stock, but HUL, that's the top laggard on the index. In fact, most of these FMCG names are under pressure. The likes of Britannia, Nestle, and even some auto names I can see are under pressure. The likes of Bajaj Auto, Maruti, etc. Bajaj Finance, of course, we spoke about it, but it's trading with a negative bias today. But HUL particularly, the company has filed a petition before the Bombay High Court challenging its 960 crore rupee IT order, income tax order that it had got over a TDS dispute in the GSK deal. Uh, is buy on dips the strategy for some of these large cap FMCG names, as also the likes of HUL and ITC? Both of them have been showing good traction if you look at the monthly charts.
Yeah, I would say if you look at HUL is strong definitely and positive on the long-term charts, on the monthly charts, on the weekly charts. But some of the technical indicators on the weekly charts, they clearly point towards overheating in the particular stock. Because if you look at the stock from almost 2200 levels made a high of 2963, currently around 2873. So any dip is a buying opportunity, but what it appears is that higher levels will be met with a strong resistance in the stock. So at current levels, I would say that one should wait and watch, not get into at the current levels, because the risk reward ratio might not be very favorable, and also the stock is approaching the psychological resistance of 3000 levels. So I would say rather wait and watch than get into the stock at the current levels.
Okay, that's the view on HUL. But let's talk about some of the queries that are trickling in this morning. I want to start off by taking up a query on Adani Power. Som Mendigar has written in, wants to know if it's a good time to enter into Adani Power. Of course, Adani Group stocks, have seen volatility in the last 2-3 months, and there have been fresh, reports and allegations on the Hindenburg front as well. But today, Adani Power is buzzing given the fact that it has won an order. Today the stock is up 4% or thereabouts, but at these levels of 660 or so, is it a good time to get into the stock, because it is still some 2 or 300 odd rupees away from 52-week highs?
Yeah, so if you look at Adani Power, we have seen the stock correct from almost 900 levels, currently it's around 700 or 660 odd levels. So if you ask me, the stock is around very crucial support zone. So there is a possibility that we could witness a stock rally towards 700, 720 or 730 levels. But that's it. There again, the stock would meet with selling resistance. So from a trading perspective, one can look at the stock because the intermediate term structure of the stock has definitely changed, which is not very positive right now. So that effectively means is that the stock could go in for consolidation, and higher levels will witness or is very likely to witness profit booking, whereas on the downside, the stock has got strong support coming on the 620 odd levels, which was a recent low. So till the time we don't see a breach below that level, I would say it's a buy on dip. But again, one needs to be booking profits towards the 700, 720 zone. So it's more of a trading play in Adani Power from a short term perspective.
Okay, that's the view then. Booking profits around 700 to 740 levels, and buy on dips, that should be the strategy. A trading play. Hope that answers your query. The next query is coming in from Jiffin. Wants to know your thoughts on RT Pharma for the long term, and he also wants to know if there are any other CDMO players that he can look at for the long term. The RT Pharma chart has done well in the last 1 month. We've seen 13% kind of gains. 666 is where it's at, off 52-week highs. But is there a chance that the stock could make higher highs and go beyond 750, 800 kind of levels over the long term?
So if we look at this particular stock, I would say the stock has rallied significantly, and the stock, if you look at the stock's performance in terms of the quarterly performance, also the stock has been doing fairly well from that perspective in terms of the profitability growth. If I look at the stock from a technical perspective, the stock has been in an uptrend from almost for 500 levels, currently around 660. But at the current levels, I wouldn't recommend, though the long-term trend is up. So, perhaps one can look at buying opportunity, not at the current levels. The important levels to watch out for the stock somewhere on the downside is 600, 620. That's an important zone of support for the stock, whereas the resistance is around 720 odd levels.
Okay, that's view on Aarti Pharma. Hope that answers your query. But the next one's coming in from Somendra Sarkar. Has a query on Maruti for the long term. He's been holding the stock at 12,900 levels. Now the stock, has slowed down, quite a bit. If you look at the last 1 month chart, it's barely moved. Even short-term charts, 1% kind of gain over the last 5 sessions. 12,300 is where it's at, and in 12,900 is his buy price. So for the long term, say about 1 to 1.5 years, what kind of levels would or should he expect, and what should he do really? Should he average or should he just hold on?
I wouldn't recommend averaging at the current levels because what's happened in Maruti is that from an intermediate term perspective, the chart structure has definitely changed, and it appears that it's gone in for consolidation post the sharp rally and the stock hitting record highs of 13,680 countries around 12,300 levels. Even on the long term charts, it appears that a top has been made for the stock, though the long term trend remains strong and positive. So the levels to watch out for in the short term is somewhere around 12,500 to 600. That's a level that one should keep a close watch on. Trading and sustaining of the 12,600 level, then one can say that the trend has changed. So the consolidation which we are seeing currently, it would appear that that has changed for the positive, and the stock could witness fresh rally. As far as downside is concerned, the stock has got good support coming around the 12,000 level. So till the time we don't see a breach below the 12,000 level, I would say one should definitely hold on to the position. And once it starts sustaining on the 12,600 level, then we could say that the trend has changed for the positive.
Okay, that's the view. Then quickly take up a couple of more queries. Uh, First one is Viru Paksi wants to know your thoughts on Awas financiers in the last 3 to 6. In fact, over the next 3 to 6 months, what he should be doing with the stock. Awas, as I was looking at the charts, I think in the 1 month it's given good returns, but in the last 5 days it has been a little sideways. For the next 3 to 6 months, what should be the strategy here?
Yeah, so if we look at Avas financiers, we've seen the stock witness some sharp correction towards the 1300 levels, currently it's around 1800 and 1850. And the stock hitting a high of almost 2000 levels, 1978 to be precise. Now the stock is around 1840. So till the time we don't see the stock reaching the 2000 level, I would say the stock has gone in for consolidation. So one should be. I wouldn't recommend entering at the current levels. That the stock has got good support on the downside towards the 1600. So 1600 and 2000 is the range for the stock. So it's more of a, I would say, a trading play. Till the time we don't see the stock sustaining on the 2000 level, we could witness profit booking in the stock. And yes, lower levels can be bought into. So initial good level for entry is around 1750 odd levels, and further down the downside 1650. So these levels are need one can keep a close watch on. On pullback, one can look at buying at these levels because upside seems to be capped around 2000.
Okay, that's the view. Then very quickly, last query for the day. This one's coming in on a GMR Airports from Sai Prasant. Wants to know what the long-term target should be for GMR Airport post the tariff revision for the Delhi airport. Looking at the charts, what would you suggest? It's at 96.7 right now.
Yeah, so if you look at GMR Airport, this at a point of time, this stock traded as high as 118 levels. So that was almost 15, 16 years back. So that's a level where the stock could reach towards, because once the stock makes a major breakout, because in 2009 it had a high of 80, and once that was reached, we witnessed almost a 25% rally. So now important level to watch out for the stock is the recent high 103, 104. Again, if that is breached, then you could witness anywhere between 10-15% on the upside. The structure of the stock from a long term perspective remains positive, but intermediate term we are seeing some sort of consolidation. So effectively, till the time we reaching above the 103 4 level, it could consolidate. But any dip is a buying opportunity. The stock has got good support coming around the 90 odd levels. That's a level where you can keep a close watch.
All right, GMR Airports, that's the view. This wraps up our query segment for today. But before I let you go, Aamar, what are your top trading picks for today or for the next couple of sessions?
I would say one can look at Bharat Forge. Bharat Forge, we've seen some sort of consolidation on the weekly charts, daily charts. We've seen some sort of breakout. So if it sustains above the current level, so it's currently on 16 odd levels, sustaining over the 1650 levels, we could witness a sharp rally towards 1720, 1750 levels. So that's a level one can keep a close watch on because the long term trend remains strong and positive, and we are seeing some sort of consolidation there. So this is one stock one can keep a close watch on.
Okay, that's the stock recommendation coming in from Aamar. With that, Aamar, would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. Look forward to interacting with you again sometime soon.
Thank you for having me.
Well, with that, let's also get our fundamental guest on board. Joining me this morning is Daljit Singh Kohli, who's the head equity at Roha Asset Managers. Daljit, great to have you here on our show on Money Control. First of all, I want to get in your thoughts on where do you think the markets are headed from here? Do you sense that there is some fatigue after the kind of run-up that we've seen? Or do you think we are poised to defy the September seasonality? Because September, historically hasn't really been a great month for equity markets. But given the fact that we are staring at a rate cut cycle that could come in, within a couple of days, do you think we are poised to head higher from here?
Yeah, thanks for having me on your show. In a very short term, it will be very difficult for us to make a guess whether we are in for defying this gravity or not, and whether the market will continue moving upwards. Short-term movements are dependent on various factors. No? We all know that there could be a news flow which can just derail everything, and there could be a news flow which can bring in euphoria also. So we tend not to get into all of that and just deciding on what will happen in the next 15 days, next 1 month or so. We would rather focus on whether we are in a structurally right direction, whether we are constructive on the market. The answer is yes, mainly because there are many factors which are working in its favor. But at the same time, it is very clear that we have been seeing this up move for a very long time without any major corrections in between, and normally that is not a very good sign because ultimately it leads to creation of bubbles. So in order to avoid bubbles, it will be healthy for the market to see some kind of correction. There are certain pockets in the market where there is a lot of froth built in, where the valuation multiples are much higher than what our traditional understanding would be. But at the same time, we are still able to find some new ideas, some new areas where money can go. So it's not, that's why I said we are constructive, because whatever new money we are getting, it's not that we are stuck what to do with this, or are we looking for just adding to the similar stocks. Actually, we have designed some more new strategy wherein a couple of new sectors where we can still actually have deployed new incremental money. So that's why we say that probably, yes, if 6 months back you would have asked us, we would have been, say, out of 10 stocks, if we have seen, we would reject 5. But today we will probably reject 8. So there will be 3 because of higher valuation. So that is the situation. But in the longer term, over next 2-3 years, if somebody is saying, then I see no reason for being in any ways looking at any kind of negativity on the market.
Right. Daljit, I couldn't hear a better part of your answer. There's some audio issues, so you may have to repeat some part of your answer in my subsequent questions. Apologies for that. But what are your thoughts on PSUs as a pocket? Because, of course, most of these or some of these stocks have come off substantially from their highs, right? Some of the defense names, shipbuilding names have come off 20 to 40% from their highs. Do you think the dream run in PSUs, is out of the way now? And if at all somebody has to really, look at taking some money off the table, this is the right time. and perhaps rotate into some sectors that offer promise now, the likes of pharma, perhaps FMCG as well. Would you concur with that thought? How should one approach the entire PSU pack now? Daljit, is my voice reaching you? Daljit, is my voice reaching you? There seems to be some audio issue then. Let's see what the markets are really doing at the current juncture. Sensex and Nifty both trading in the positive zone. In fact, the Nifty is back above that 25,400 mark, almost at the high point of the day. The Nifty, the Sensex also above that 83,100 mark. Mid and small caps are outperforming. The mid cap index is up 0.5% or thereabouts. And if you look at the Nifty Bank Index, good traction today as well. 0.4% kind of gains coming in there. Remember, last week the Nifty Bank Index gained somewhere around 3% or thereabouts. 52,150 is where it's at. So 52,000 has been cleared, which is good news for the Nifty Bank Index. In terms of individual movers, metal names are doing well. So the likes of Hindalco, Tata Steel, JSW Steel are among the top gainers. Adani Enterprise, that's the top gainer on the Nifty as we speak. What is also doing well is Kotak Bank, and Bajaj Finserv ahead of Bajaj Housing listing at 10 a.m. is active and positive in trade. But let's see whether Daljit is back on with us. Daljit, I was asking you about the PSU pack and how should one really approach it now, because most or some of these stocks have come off almost 20 to 40% from their highs. Is it a good time for people who are making money to rotate out of PSUs and look at sectors which hold promise now, given the fact that we've seen IT, pharma, defensive, so to say, doing well? So is it the right time to rotate into defensives from PSU?
Yes, actually, this is the sector which we are very cautious about. In fact, for last many months, we have not added any of these things in our portfolio. No PSU, no railways, no defensive stock in our portfolio, just as disclosure. So we are basically, the valuation growth was probably the maximum in this area. Now, I'm not saying that these companies are bad or that they don't have a bright future ahead. All of them are very good companies. They are being well managed. They are now, a lot of things have changed. The style of working has changed over the last many years. So things are improving there. But the point is that in the stock price, if you have already factored in what is going to happen after next 5 years, next 10 years, all of that you're discounting today, then obviously there is not much left for your upside is not left. So that's why we are very cautious for this sector. And yes, we are avoiding this. The sectors that you mentioned, pharma, agrochemicals, chemicals, those are the areas I think which have a lot more potential.
Okay, and last question really, Daljit, your thoughts on how one should play NBFCs now, because on one hand you have gold prices at record levels, right? So you have these gold loan companies like Muthoot and Manappuram. On the other hand, you have a new entrant in the housing finance sector, right? You have Bajaj Housing that's making its debut at 10 a.m. You already have players like LIC Housing Finance and a lot more Abbas financiers, a lot of these companies. So do you think financial space should be played via NBFCs, and if yes, would you prefer a gold loan firm now, or do you think housing should be one theme that should definitely be a part of your portfolio?
I agree with your point that financials should be played through NBFC now. Avoid banks. PSU banks, we know that they have, and most of the private banks also, they are all facing problems on deposits. Cost of funds is going up. So unless RBI takes any action, which is probably dependent on many more factors, and this rates start going down, we don't see too much of relief coming in on the banking side, on cost of fund side. At the same time, on the growth side also, most of the positives have been already factored in. So I would say yes, we are also looking at NBFCs, and within NBFCs, one should look at very niche NBFCs. So gold finance is one, power finances are other area which we are very bullish on. We like that probably since power sector itself will do well, and that theme can be played through various sub-segments, and BFC, which are specifically catering to that area, can also be looked at. Similarly, gold financing you talked about, but only problem is that in gold finance, though, there are not too many companies, and most of these companies are already priced higher now. So I think valuation is not in your favor. Housing finance, I would say we would still be little cautious. One, because the reality cycle has already been played. Second thing is that the funds, availability of funds. And third is the quality of asset, because all these borrowers, now we see that this trend of borrowing from multiple places, etc., that can lead to some kind of pressure on asset quality. So we would rather stick to the niche NBFCs that catering to specific sector needs.
All right, point taken, Daljit. With that, I'd like to thank you for taking out time and joining us. I wish I had more time to have a longer conversation, but we'll keep the other questions for our next interaction. Thanks a lot for taking out time and joining in this morning.
Thank you.
Well, with that, just want to remind our viewers, 15 minutes to go before the listing of Bajaj Housing. Now, of course, the company is, or the shares of Bajaj Housing are set to see a blockbuster debut, given the fact that shares were commanding a premium of over 100% in the unlisted market. The issue attracted highest number of bids by value in Indian history. The 6,560 crore rupee IPO received bids worth 3.24 lakh crore rupees. Overall subscription was nearly 64 times the shares on offer. That's the kind of interest or demand we saw for the shares of Bajaj Housing. Of course, it's the first IPO and listing from the Bajaj stable in over 3 decades, and no wonder there's so much excitement around this company. Analysts are even bullish from a long-term perspective on the stock. So yes, that's one listing to watch out for. Just about 14 minutes to go for that very much awaited debut on the bourses. But leaving you with the Nifty almost at the high point of the day. Just want to see where it's at right now. So it's at somewhere around 25,437. Okay, so we did hit a fresh high, in fact, in intraday, in fact, just a few minutes ago. 25,445, that's the all-time high on the Nifty. We hit that level, and the Sensex also, at 83,144 or thereabouts. So good day of trade, good Monday. We've hit a fresh record high. The mid-cap index is also at a fresh high, 0.5% higher for the Nifty mid-cap index as well, and the Nifty Bank index also extending its up move from last week. So good day. Let's hope the momentum remains intact as we progress through the day. But with that, we are timed out on this edition of Opening Bell. Thanks a lot for tuning in, and from me and the entire team, have a great trading day and come back and join us at 3:30 p.m. on Closing Bell with me right here on Money Control. Have a good day.